All right. Welcome, everybody. Welcome to the Minds of Market podcast, the newest one. And boy, you talk about an icon, a legend in the trading space, both from starting a career on the floor to just building a behemoth that we're going to get into momentarily here. I am so proud and happy and pleased and thankful that Tom Sosnoff is our guest today. Tom, thank you so much.
Thanks for having me.
Absolutely. Tom, I'm going to give you a quick intro, quick bio here because I could probably spend the entire time doing it. But Tom and I actually go way back to the trading floor from a long time ago. But Tom right now, he's the CEO of tastylive, Inc., co-founder of Thinkorswim, co-founder of the Sosnoff Sheridan Corp, and as I just mentioned, a former CBOE trader. Back in 2009, Scott and Tom sold Thinkorswim, and many assume that he was just kind of right off into the sunset, as most people probably would have, but not this guy here. However, these two they had their own plans. Tom was busy building tastylive. Scott set out to create the best trading experience possible. And so founded in 2017, tastytrade puts traders first with industry-leading customer support and cutting-edge technology. For those of you that don't know what tastytrade is, you will by the end of this. So, Tom, hopefully that was a good brief overview. Like I said, I know there could be a probably another.
No, I'm all good, Scott. I'm all good.
Awesome. So, kind of going back to the days on the floor, what brought you to the point of saying, hey, you know what, there's a better way to trade. I'm a trader. We, been down there for a long time. There's a better way to trade. What really brought you to thinking about building, the first platform?
Well, it wasn't that I necessarily thought there was a better way to trade. Like, I don't think that ever was part of the equation. I felt I was standing in the OEX pit, which was the S&P 100 one day, and it was like probably sometime 1998, 1999, I don't remember. And I'm looking around and I'm like, I've been doing this for like 19 years now. I've been standing in a 1 foot spot. And screaming my lungs out. And listen, at that point, I'm thinking to myself, I was in my early 40s at that point. I'm like, because I started when I was in early 20s, probably just like you. And I'm like, this has been an awesome experience. It's been an awesome life, but there's got to be more to life than just standing here, trying to make a few teenies or a few eighths or quarters, whatever.
And catching every cold and virus of all the guys that were around you all the time.
Well, I loved the whole locker room environment, there. And honestly, by that point in my life, all my friends were standing within a foot of me, so like you couldn't really ask for much more. And, and we were still, everything was cool. But I think there was something, it started probably 10 years earlier going off in the back of my head that there's gotta be, there's gotta be more. Like I always felt there was more, and I didn't know what more meant. But I figured by 1999, I kind of tapped Scott on the shoulder and said, we've done a lot of good things together so far, but let's roll the dice. Let's try something different. And he was like, yeah, let's go for it. What the hell? That was it. I mean, we didn't necessarily think we could do something better than what we did on the floor. We just thought we would do something different. We thought that there was an opportunity somewhere else. We didn't exactly know where.
So when you started out, building this, I'm assuming that your background, Scott's background are definitely not in IT and in computer programming and so, right? I mean, you just had the trader mentality of saying, hey, this is what I want to see. This is what fellow traders want to see if they're now trading on the screens. Was that? Yeah.
I mean, we were cocky in it was cocky. Yeah, right. And we were cocky in the sense that like there wasn't anything we didn't believe we could do, but we didn't know anything about building technology. But we figured that if other people in the world, every great company every great technology company wasn't necessarily started by a great technologist. And it was our feeling at that time that, we'll find a way to build this stuff. We just needed to know exactly, we weren't exactly sure what we were building at the time. We had a bunch of different ideas, and we had trouble at first, locking down a really brilliant CTO and a really brilliant technologist, but we made it happen. We figured out a way.
Which, obviously paid off for you guys, but also the millions upon millions of people that, you really affected from 2009 on, or,
this is
early 2000s on.
Yeah, this is actually 1999. Right. We've probably introduced, I would say, somewhere people touching our technology over the last 25 years. I would say it's been close to, 5 to 6 million people.
I mean, that's absolutely unbelievable if you think about all of the, the traders that are out there. And when you think about it, there's not a ton of platforms, right? There's a good handful of them, but there's not an infinite amount. And that's just a lot of people. So once you got that up and running, and then you eventually sold that off, that wasn't enough, right?
Well, it was 10 years of it was 1999 to 2009, and it was 10 years of basically sacrificing a lot of stuff, like my family, like my life. But I loved every minute of it. I'm not, it wasn't, no regrets whatsoever. It was an amazing experience. And when we sold Toss, because we were publicly traded, and when we sold Toss when TD bought it, I stayed on for 2 years, but TD was a good company, and I had no issues with the CEO or with the company at all. But I just felt like, again, it got through my head. I mean, I felt like I was young. I was just in my 50s. I'm like, there's got to be more. There's more out there. I wasn't ready to, I didn't want to spend the rest of my life, not working. And and I also felt like there was something I always wanted to do, which was, I loved the content part of the business. Like Scott always ran the brokerage site. If it was a restaurant, Scott essentially would be running the kitchen, and I'd be out there, meet and greet. And I loved the content side of the business. So I had this idea to build a digital content platform, and I went to the CEO of TD Ameritrade at the time, Fred Tomczak, who's now amazingly the CEO of the CBOE, which is just a crazy small world.
Yeah, but a lot of that happened pretty quickly.
Yeah. Fred didn't know anything about options back when he originally did the deal, but he learned a lot. He's a smart dude, and he's a great guy. And we're still really good friends till today. But I went to Fred and I said, Fred, I love you guys, and I've given everything, I could to this firm, and I busted my butt, but that unless I'm going to be CEO, you're going to step down and give me the role. And he goes, not over my dead body. And so I go, okay, well, that's what I thought you'd say. So I'm going to start another business, and I'd love you to work with me and be an investor. And he goes, done. He said, I'd love to do it. So we started off as kind of partners, and TD was the first backer of Tasty, and eventually they dropped out, and we took over, pretty much ourselves. But it was a good vote of confidence, and we built something from scratch, which nobody had any idea what we were doing, because we didn't have any idea what we were doing, and it worked, and it was fun. It was an amazing experience. I was like, I can't believe that this is what we ended up doing, but it was great.
So when you went out to start building that, because maybe I don't know this, you went out to build the content part of it, the investotainment part of it, the tastylive, and then the platform came next, or was that even a vision at the beginning? No,
at the beginning, there was no vision. We weren't going to build any technology. In the beginning, we decided we're just going to be, we're going to do content marketing, and we're going to be really good at it. And our customers are worth a lot of money, and we will make deals with various brokerage firms, and we'll introduce customers to various brokerage firms, and they'll pay us a lot of money for that, blah, blah, blah. And the funniest thing was, we went around to all these brokerage firms, and everybody told us, go jump in a lake.
Pretty short-sighted at that point.
Everybody said it. Every single firm out there said that to us, except TD, because they had invested. So they go, so Fred's like, all right, I'll buy in, let's do it. Well, 5 years later, we built the largest digital financial network in the world, and TD made a great trade. And they benefited from it, and even more so than we thought. They actually tried to buy us 5 years after we did the deal, and we said, we all kind of looked at each other and go, you know what? As much as we like you guys, we want to, if you want to buy us, we better go off ourselves, because, that means we've got something really special.
Exactly.
So we built the brokerage firm. We originally called it Tastyworks, and then we changed it back and we gave the name tastytrade, and we went tastylive. But tastytrade was the original name of the financial network. And we've been doing the financial network now. Tony and myself and Vanetta and Liz and Jenny, Liz and Jenny were both traders on the floor. They worked for different firms. Liz worked for IB, Jenny worked for a couple market makers, and we had a couple other traders. And we ended up, we've been together now since doing the show since 2011. It's been 13 years. We launched the brokerage firm in 2017, and it's probably the largest boutique in the world right now, and the third or fourth largest. We're the largest derivatives only firm pretty much, but we're, I don't know, one of the top 5 brokerage firms in America and one of the top 5 futures firms in the world. So it's crazy. And it's bigger than Thinkorswim ever was, as nutty as that is.
That's unreal. And if you think about it, just going into what you wanted to do in your next chapter of building this entertainment, type of thing, and then to turn it into one of the largest, brokers in the world, basically. That's nuts. How many option contracts a day? Like, what's average daily volume on the platform?
On the platform, we do just between 3.5% and 4% of all the retail volume in the world. So, and of all the retail option volume, we do, on a percentage basis, I think we do the most futures options volume of any firm relative to futures, but I think it's maybe the 3rd largest in the industry. I don't know what percentage of overall OCC is. I don't know what the latest OCC. Yeah. That's not side business I'm on, but we're somewhere in the top group. And remember, we're tiny compared to, TD Schwab with 10 million customers, sure. E-Trade, 5 million, all these firms, Interactive Brokers, 4 million customers. I mean,
but I think you're bigger than a boutique. I mean, you called a boutique. I think you're bigger than a boutique.
We like to call ourselves a boutique because we like to think of, we don't want anybody getting full of themselves. Like, we want everybody to come into work, bust their ass, treat everybody right, build cool stuff. We do not let, we have a rule. We haven't high-fived in 25 years. And it's part of our culture. We're the same people 25 years ago. We'd have the same conversation we're having today. Like, nothing's changed.
Well, and that says a lot about you, it says a lot about Scott and your employees. And I know a number of them because you have a lot of people from the floor from way back, and they're good people. They're besides what they do on the business side of things, they're good people. And in our business, to find a good person, JJ being one of them also, who, you brought in fairly recently, there's not a lot out there. So that goes to, a lot about the culture of what you built.
Yeah, well, the cool thing about all the ex-floor traders is, on the one hand, they're great people, but on the other hand, nobody else would ever hire them. So it's great.
Very true. Just think of all the ex-floor traders and what they went to do, and just kind of floundering.
No, it was. I joke around about that all the time, but we were the home for wayward dinosaurs, and we were the home for for lost souls, but. Yeah, we over the years, I don't know, we've probably hired close to 1,000 people in Chicago, and we are very committed to, kind of our roots. We feel like it's an obligation because all of us here running the company feel like, we got some really good breaks along the way from people that trusted us. And so I feel like you've got to, give a lot of that back. So we've kept a fairly closed ecosystem and tried to hire smart young people, but also people that have, some background and some history with us, that kind of stuff.
Yeah, no, that's great. I've got to ask you something because I get this from my clients every single day.
Okay, what?
So retail trader puts their order in.
Yeah.
Okay, regardless of what platform it is.
Sure.
They put their order in. What happens to that order, right? Is it a first in, first out sort of thing? Do people get filled because of the size they're putting in?
No.
Does it really matter what platform they're on? What happens behind the scenes?
No. First of all, size has absolutely the only size that matters is like a huge size. So like you put in an order that's bigger than an electronic system, which doesn't happen very often. It may go to, like in the SPX or something, it may be treated differently. There may be open outcry involved, something like that. But everything else is fully electronic. And let's just say it's 200 contracts, from one contract to 200 contracts.
Okay.
Every single order from every single broker is essentially treated the exact same. There is a speed difference. Like the difference with Tasty is that we are the only true high frequency platform. That means our middleware is built off HFT technology, the same kind of technology that firms like Citadel, like Susquehanna, like Simplex, those kind of firms that they'll use to route orders. It's not older legacy technology. So maybe it's, 100 or 200 milliseconds faster than our competitors. But that doesn't give you a better fill necessarily, and that doesn't give you a leg up or anything like that. But what happens to your order is, in the business today, all the orders are matched in some competitive environment in cyberspace in a matter of a few milliseconds before they get to the trading floor. So what happens is there's this auction marketplace in cyberspace where all the high frequency firms, they look at the orders really quickly. They determine if they want to price improve to get a larger share of the order. And then the order goes to the exchange, to one of the exchange floors. And it doesn't matter. It's kind of like a wheel. So it's just arbitrary where it ends up. And that's a non-spread order. A spread order the same process will happen, but then it will end up in a spread book if it's not filled. The reason that's really good for retail investors is that you're getting the benefit of an auction marketplace before it gets to an exchange floor. So you're getting the benefit of price improvement. That's why you see so many orders come back with a price better than the price you put in. It's the best, for whatever anybody wants to say about, payment for order flow and high frequency and the Citadels of the world and everything else, what's happened over the last 20 years is it's gone from, or 30 years, it's gone from somebody like me or you sitting there thinking, oh, this is what I'll pay for. Like there's a process in our brains, whether it's a half a second or 3 seconds, whatever it is. Now you're just interacting with the computer. You're never interacting with another customer. Or let's put it this way, it's really rare. And you are going to, essentially be filled in a matter of a few milliseconds. And then it goes to the exchange floor and comes back to you. It's the greatest system ever. Nothing in the world is anything like it.
I mean, it is really unbelievable. And when I tell people, and I'm sure you still explain it also, and I know you've written about this, when I tell people that, trading is truly an auction marketplace, just like when we traded on the floor, it was open outcry, it was an auction. Now what you're describing is it really is an auction, but just in cyberspace somewhere.
Yeah, it's an auction essentially just run by massive servers that if you're high frequency firm A and I'm high frequency firm B, there might be positions that fit me better than they fit you, so I'll make a slightly better market. Sure. But those are all built into they're built into the theoretical values of not our platform, but of the high frequency platforms. And the competition is brutal. That's why so many firms don't even make it. The high frequency firms, that they're down to fractions, of 1/100th of a cent. Yeah. And it's crazy how competitive it is. And who's the beneficiary? Well, with lower commissions, the customer benefits. Tight markets, lower commissions, customer benefits on every level. It's what has allowed the business to grow as dynamically and as exponentially as it has.
I think there's a lot of retail traders, customers out there that really don't understand that. They always think that they're getting, oh man, I got a better fill he got the fill, I didn't get it, or, man, my platform is always behind the other platforms that are out there. I think there's really just a blur, they really don't understand how the process works.
Every platform is, the difference between platforms is not, I mean, there's a minuscule speed element difference between platforms. Between all the major platforms, there's a minuscule element of speed. I would argue, like platforms like Tasty are faster just because they're newer and they run off, cleaner technology. But that's not the difference. That's not why you trade from one platform to another. The reason that you trade on, I believe, on the newer platforms is because the way they're designed is they optimize the interface. Like we're really big. We started with Thinkorswim this way, and then we've not perfected it, but we've gotten a lot better on Tasty of creating an interface where there's the fewest number of clicks to do the most quantitative and probabilistic things you can do with the fewest number of clicks, regardless of the complexity of the trade, of the underlying, of whatever it is you want to do. I mean, imagine in today's market, you're looking at a single interface and you can basically trade any single product, whether it's futures options, stock options, indexes, ETFs, anything else. The interface is simple, it's clean, it's lightning fast, and it provides essentially all functionality. That's what we have today. It's great.
Who would have, who would have thought that was possible? Even just, not so long ago, 5 years ago. I mean, it really
we've come a crazy long way in the last 25 years, and I'm really, I kind of think Thinkorswim led the way in that move. Like that was the first platform. We had a brilliant designer and some crazy smart developers, and they really changed the way the industry, option trading went from about 9% of online brokerage to almost, 65% of online brokerage. And it's all because, we started with this, interface built into pretty slick piece of technology that people just were like, oh, this makes sense now. Now it's cool.
And are you guys seeing, all the rage over the last year or so, been zero DTEs, right? And now in the SPX, over 50% of all SPX volume are zero DTEs. I assume you're seeing that on the platform also?
Well, of SPX volume, yes.
SPX volume, right.
Yeah, sure. It's not of overall volume, not even close. I mean, for us. But
no, just SPX volume.
Yeah, SPX volume. Well, you know what? There's a couple reasons for that. First of all, obviously there's the instant gratification piece, but the crazy thing about zeros is when they first popularized in the SPX about 11 months ago, everybody was worried about, oh man, this is gonna blow up. We're gonna have a crash, or volatility is gonna go haywire, all this kind of stuff. The reality of what's happened is really interesting. Volatility has contracted nonstop, and the flip side of it is zeros. We do a ton of research on zeros because we're a think tank, and there's almost no premium selling zero strategy for the last 11 months, regardless of what the strategy is, whether it's short straddles, short strangles, short iron condors, iron flies, you name it, whatever it is. Anything selling front month premium has been a net winner over the last 11 months in a big way, with virtually almost no down months. We've had no outlier moves. So the crazy thing is, like, the outlier moves have come in, in chip stocks. The outlier moves have come in lots of other, stocks, but they haven't happened in the SPX. So the zero DT players, which is why it's picked up so much popularity, have been killing it. Now, it won't stay like that. It won't stay like that. But it's been like that this year, which is interesting way to kick off, the zero DTs.
Yeah, and what I think is most important about that for people that don't really understand it, or just like in the past, people that didn't understand options and said, "Oh man, it's just gambling, right? You're just rolling the dice here." But with zero DTs, like you said here, there is a real significant usage to it, not just for the day trader retail guy, but for people like us, or people, even bigger firms that maybe manage some of their other long volatility or long portfolio, long premium position by selling some zero DTEs, and it hasn't brought that fear that that everybody thought was going to be, oh my God, this is going to lead to a market crash or a Vomageddon, whatever it is.
Vomageddon. We'll be waiting for Vomageddon for in 11 years from now. They'll have a mini crash or a meltdown one day, and they'll go, oh, I told you, Vomageddon in 2019. I told you this was going to happen. So it's crazy.
Yeah. Yep. Shoulda, coulda, woulda. Another question for you. With the platform, okay, somebody wants to change over, right? They've been trading forever. They want to change over. Easiest way is to literally go online or pick up the phone and talk to one of your customer service people who I know personally. Unbelievable customer service.
No, the easiest way to do everything in today's world is online. But you can talk to we have a whole accounts team, and that's all they do. But the easiest way, the hard thing for active traders to move accounts is the whole ACAT process, which is the account transfer process. It stinks. It's archaic. It's been around for, I don't know, 40 years already. It is the worst process of transferring like open positions. And especially if you have like open, if you're transferring stock, it's easy. But if you're transferring like open option positions, you could be locked out of trading those for a couple of days. And so in today's world, you would think that, especially with ledger technology, that we can move positions in a matter of like 33 seconds or 3 milliseconds. Yeah. But for some God knows reason, it takes 4 to 7 days. It's ridiculous. And it's all because of legacy back offices and all this stuff, and everybody unwilling to upgrade their back end technology. So what I always tell people is you can move cash in a day. So just liquidate your positions wherever you are eventually. When they expire, when you close them out, just liquidate the positions, move over cash, and then just start, on the new platform. Right. Cash you can move over same day. And awesome. And it's so much easier, but you can do the whole thing online. It's a piece of cake.
Excellent. How did you get in with the Cubs? Because I'm as you may or may not know, I'm just rabid, diehard, absolute end of the world Cubs fan. And every time you turn on the game, and right behind the pitcher's mound, there it is.
So I'm going to tell you a fun story. Okay. So when we owned Thinkorswim and TD was going to buy us, it was 2009, and the market was kind of in crash mode. Remember, end of 2008, 2009, the market's kind of crashing. Well, 2009, that same period of time is when the Ricketts, who also owned, Joe Ricketts was the founder of TD Ameritrade.
Yeah.
But the Ricketts were the largest shareholder in TD Ameritrade, but they were going to buy the Cubs. So at the exact same time, there's like a 3-way trade happening that nobody heard of. So TD Ameritrade wanted to buy Thinkorswim, but we didn't want cash because you're thinking, well, why wouldn't you guys want cash? We didn't want cash because their stock was really cheap.
Yep.
And everything was cheap at that time. Remember, the financial stocks were kind of melting down, and TD Ameritrade stock was like $10, let's say, or $12. And so we're like, we would rather, we're traders. We were rolling the dice. We're like, we would rather have stock. They wanted to give us cash because cash was more accretive to them. Stock isn't. Cash is more accretive. So they're like, we want to give you stock. We want to give you cash. I'm like, and Scott and I are like, we don't want cash. We want stock. They go, we don't have enough stock. But then the Ricketts were going to buy the Cubs, and they needed 700 or something. They needed, the deal was like $800 million, something like that. But they needed $350 million in cash, because they didn't have enough cash at the time. So we did a 3-way trade.
Where it's going.
TD Ameritrade bought $350,000 worth of $350 million worth of stock from the Ricketts. They gave us the $350 million worth of stock, and then we gave them the balance. We did cash, however the deal was. It was a 3-way trade. So it was a crazy. No, but we never talked about it. We never publicized it. We never said anything. But the Ricketts got the Cubs. We got the stock we wanted, and TD got the platform they wanted. And
wait, just say that one more time, because like to actually think about, the layperson out here, the Ricketts got the Cubs, you got your stock. Yeah, that's unbelievable.
And TD got Thinkorswim. So
monopoly trade.
The trade worked out for everybody. TD got the best platform. Thinkorswim was a great company. They made a lot of money on it. It was an amazing trade for them. The Ricketts got the Cubs. The Cubs were they bought for what the Cubs bought it for. They're probably worth, I don't know, at least $4 or $5 billion now. They paid like less than $1 billion. And we got what we wanted was some stock in TD, which went higher. And then we also got a chance to go on to our next project. We're entrepreneurs, right? That's kind of what our dream is. Let's move on to the next project, which turned out to be Tasty. So we got to do what we wanted to do. And so everybody won.
Awesome.
Since we've always stayed, all of us have always stayed friends because, traders, it's a good deal. And a couple of years ago, when the Cubs were kind of rebuilding, let's put it that way, they came to us, Tom Ricketts, who's the chairman of the Cubs, Joe's son. And Tom's a great guy. And if you remember, Tom Ricketts started his career on a brown badge on the floor of the CBOE.
I did not. You know what? I don't think I knew that.
He was a trader on the CBOE, Tom was, and he was on a brown badge trading, I think it was Chrysler at the time.
Okay.
And he couldn't make a dime. He's always like, I looked up to you guys because I could never make a dime. I didn't know how you guys made any money because I couldn't make. Anyway, great guy. He started a bond firm. And so we've kind of always remained, just friendly. I wouldn't say friends. I'd say friendly. Yeah. And the Cubs came to us when they were looking for marketing partners because their old partners pulled out. And they said, Tom, we've got a new idea this year that Major League Baseball is letting us put a logo on the back of the mound. And I'm like, you know what? I really like that idea.
I mean, you get seen on every single pitch.
I know. But
every pitch.
At first they did it in chalk and you couldn't really see it that well. So I kind of bitched at him and said, guys, this isn't fair because everybody walks over it. You can't see our logo. It's in chalk. So they go, we'll put it on digitally. I go,
digitize it. Yeah.
Yeah, we did. They digitized it. So now it's awesome.
Oh my God. That is very cool. That is
it was fun. I mean, you're a Cubs fan, so you see it, but not everybody sees it.
All the time.
Yeah.
That's great. Listen, I don't want to take up any more of your time. You have been gracious. Folks watching this here, again, I know Tom from a long time ago. You may think of just Tasty, but there's more to Tasty than just a trading platform. There's real people. There's people behind the platform that care. You guys all have to check it out. Tom, this has just been awesome. I really, really appreciate your time.
Thank you. Thanks so much. This was great. Thanks, everybody.
Thanks. The Minds of Markets podcast is an exploration, a deep dive into the minds of some of the best traders and investors in the market. Our goal is to help you, the listener, learn from some of the best out there to improve your knowledge and skill set as a trader or investor. The Minds of Markets podcast should be used for information and entertainment purposes only. The opinions expressed in this podcast are our opinions only, and none of the information contained in this podcast constitutes a recommendation that any particular security, portfolio of security, transaction, or investment strategy is suitable for any specific person. Trading is risky, and past performance is not a guarantee of future results.